Hello, and welcome back to Instant Insights. At Global Data Strategic Intelligence, we track over 100 tech, industry, ESG, and macro themes impacting all major sectors. I'm Carolina Pinto, and today I'm joined with Christopher Granville, Managing Director of Global Political Research at Global Data's TS Lombard. Chris, how are you?
Fine, thanks, Carolina. Thanks for having me.
No problem. I think it's a very trying time to have you on. Of course, last Wednesday night in London time, afternoon in US time, it was Donald Trump's Liberation Day, where he announced a series of tariffs on 120 countries, I want to say. And if we start a little bit with the basics, of course, the financial markets continued to tank now 5 days later all around the world. My first question is, we've had this reaction, but what is the rationale behind the tariffs? Can we even say that there is a rationale,
or is it just Alice in Wonderland? Well, we're very much in a real world of serious shock, a structural shock for the global economy. But that fundamental question you just asked, Carolina, is about policy. It's a policy shock which comes out of the blue, not in the sense that Trump didn't advertise this. He trailed it certainly throughout his election campaign last year, but it doesn't emerge organically from the economy. So to that extent, it's analogous with, say, the COVID shock, which just comes down and affects the entire global economy, business, public health, and the welfare of everyone. So I think that analogy is right. But your fundamental question is ultimately political. And I might just say up front that in this podcast, we'll be focusing on the political motives, drivers, and consequences of this US tariff Liberation Day drama. So your question, that was all preamble. I think that it's always important in analysis to trace what is the motive. And I think it is clearly identifiable. There are three basic goals for Trump tariffs. The first is simply a negotiating card to extract from a foreign country something which the United States government wants, which is not related to trade. And perhaps the most important example of this for the global economy is that on the tariff slapped on Chinese imports into the US, before the 34% so-called reciprocal tariff announced on Liberation Day, we already had an incremental 20% tariff, which was explicitly linked to the alleged role of China in exporting to the US chemical precursors for the fentanyl opioid drug, which is causing such ravages in parts of US society. So that's one thing. And then the second thing is tariffs. Historically, they were a way going way back centuries, or a way for governments to raise money. They're a tax. And the Trump administration is interested in capturing revenue from increased tariffs on imports into the US and using that revenue to offset other tax cuts. But the third and the most important one, and here we come, I think, to the answer to the question about the fundamental motive, is about industrial employment in the US. That decades of globalization have hollowed out the heartland of the US labor market, manufacturing employment at levels of mid-wage, mid-skill, giving secure and dignified employment to communities across the country. And the strategic goal is to restore that, to reshore manufacturing. This is the strategic goal, you could say, of the MAGA, Make America Great Again movement. I would say on a spectrum between basic manufacturing, long since lost mainly to Asia, but other parts of the world. But also there's an overlay which goes into the world of the US security establishment, US strategic thinking, that the United States has lost very important industrial supply chains, which ultimately are linked to military capabilities, but which have to do more broadly with national autonomy, resilience, and security, and getting away from overdependence on other countries, most especially China, the great strategic adversary, the new peer superpower. But on that spectrum, my judgment would be that the MAGA political impulse is coming at the lower end, the lower value end, just getting more basic manufacturing employment into the US. So I would say that is the rationale. Whether it's a chimera or whether it can ever be achieved, I guess is a question we can come on to.
As you put it, there is three goals. One of them is revenue. One of them is returning manufacturing labor into the US. Are these not contradictory? In the way that if you are successful at bringing American manufacturing back to the US, would you not then reduce the revenue that you are getting from the tariffs?
You put your finger, Carolina, on one of many contradictions. So again, let's just take a deep breath, take a step back. There is a school of economic thought which would say that the whole project of reshoring a relatively low value manufacturing employment is a chimera. There is no example in economic history where that happens. Countries move up value chains. They have to discover new opportunities to create value added, new levels of technological advancement of skills, and so on. That's a whole rather academic, but still very relevant academic debate. And so that's a fundamental contradiction, which many would argue makes this whole project unrealizable. But as you say, there are lower level contradictions, which just within the internal logic of the project. And to be sure, if tariffs succeed in reducing imports, which are substituted by more domestic US production, then the revenue from those tariffs will fall away in time. So they're certainly not a replacement for recurrent tax revenue, at least over anything more than a relatively short term. But I would put my finger on a final contradiction, since you raised the question of contradictions, and one which could also make this whole project something of a mirage. And that is that if you're to have that investment in reshoring of manufacturing inside the US, you need to have stability, a modicum of certainty. But what do we see? We see the complete opposite. We now see the so-called weaponization of chaos, absolute uncertainty about where this will go. The Trump administration saying that it's open for negotiation with trading partners if they want to make the US interesting offers, and some of these tariffs can be reduced. How long is that going to take? Which negotiation is going to be prioritized? Is it possible to conduct multiple negotiations with multiple trading partners in very complex areas? Or is it going to be quick and dirty deals with just Vietnam or let's say EU or China itself just making an offer which the Trump team decides to accept and to announce a big win? This could be weeks, even months before we get an answer. In the meantime, there will be deep uncertainty. There will be the effect of tariffs in squeezing consumer incomes and squeezing US company profit margins, causing a risk of a loss of confidence, a loss of jobs, and that whole vicious cycle or negative chain reaction, which ends up with recession. So this, I think, is the most urgent contradiction or problem. And whatever you think about the validity of the underlying project, makes it extremely problematic that the stated goals of a great revival of American industry, making America great again in that sense, will be realized.
Well, to add to this contradiction, not only there is instability on whether these tariffs will stick, but then also that the presidential term is only 4 years. So is it worth for a company to move their supply chains back to the US and then in 4 years? Or less than 4 years.
Very good point. In the teeth of such uncertainty, a rational reaction and arguably, as you've just implied, Carolina, a predictable reaction for all economic agents, US companies themselves, but trading counterparties around the world, would be to put your head down and just wait to see how this blows out. And in particular, and you mentioned the timescale of a 4-year presidential term. It's actually less than 2 years before the midterm elections in the United States in November next year. Just wait to see the effect domestically on the US political scene of an economic downturn, unpopularity of the Trump administration, uh, uh, dissent within Trump's own Republican Party, which has only very narrow majorities in the two houses of the United States Congress, and potential backtracking on all of this in the face of domestic political pressure. It would be rational perhaps just to wait and see how that plays out before doing anything. And I guess that all I would say is that the expectation that there may be some quick resolution, I think, in my view, I would say is too optimistic. There is a militant spirit in the Trump administration that they've rolled the dice in this dramatic way early in Trump's presidential term. They are speaking of a willingness to accept something which is characteristic of deep structural reform always, namely that you get pain up front and the gain coming only later. Regardless of what one thinks about whether the gain is realizable or real, that willingness to accept the pain up front suggests that this shock will persist. And I think it would be prudent to assume that we're talking at least about months rather than just a few weeks.
I think you're completely right. And it's not only the instability of having tariffs, but it is what will change and their persistence in doing so. Now that we've talked a bit about the rationale, what are the consequences for geopolitics, for geoeconomics? I noticed that T.S. Lombard described Liberation Day as a huge geopolitical win for China. What's China's role in this, and why is it such a big win?
Well, I think that where you've picked out, Carolina, the most important example of a really crucial general theme, that shocks like this can have major collateral impacts and often consequences which are unintended. T.S. Lombard were arguing that this is a geopolitical gift to China as one of the most important collateral impacts, because the China's closest trade partners in Asia have been the hardest hit by the Liberation Day tariffs, and this creates opportunities for China to deepen ties even with the US allies in its neighborhood, in particular Japan and South Korea. There was a coordination meeting of trade officials of those three countries only a week ago.
Very unprecedented.
Absolutely, that's a sign of the times, and we'll see more of that. Which is not to say that Japan wants to give up the US alliance and fall into a Chinese sphere of influence. Of course not. It's these shifts are incremental and gradual, but the small things build over time, and that, I think, is a major feature to look out for. But I think more broadly, we're seeing a major global fragmentation and a shift in the usual organization of the world. We've seen this political effect already in Europe as a result of Trump's approach to the Ukraine war, to the NATO alliance with European countries. And the result has been a major change in economic policy. That political driver making an economic change in Europe, in Germany in particular, which always previously been blocked politically in Germany. That is, to stimulate domestic demand using fiscal policy. Going back to China, it will clearly produce more impulse for a shift of Chinese economic policy towards stimulating domestic demand, which, by the way, is very beneficial for China and the rest of the world. So you can have unintended consequences, some of which can be positive. I just mentioned another example, which is other countries in the middle between the US and China, like Brazil, a major economy. As a result, now it's going to be looking to diversify, even though it was relatively less severely affected by Liberation Day tariffs than other US trading partners. It's looking to diversify its international trade. President of Brazil, President Lula, was in Asia last week, looking to find new export markets for Brazilian beef or the Embraer airplanes in Vietnam and Japan. Meanwhile, senior Brazilian ministers have been in Europe trying to seal the Mercosur deal between the EU and Brazil. So these would all be positive developments if they happen, not necessarily offsetting the economic shock from the Trump tariffs, but still clear consequences of it, and they all need to be looked at. This is a major reshuffling of the geopolitical and geoeconomic pack, and the consequences will continue to ripple through the world economy and geopolitics for a long time to come.
Apart from China, are there any other consequences, maybe unintended, although I guess all of these bilateral, multilateral relations building in between the countries, between US and China is, I suppose, unintended, but are there any other consequences?
Well, it's often the case in global affairs that something completely unrelated can have a major, not necessarily decisive, but contributory effect. And I mentioned a few beneficial or silver lining type impacts, but there might also be negative ones. And one can think of, would this be the time when opportunistically, with the world distracted and confused, that there might be some new conflict in the Middle East, with conflict brewing in particular over Iran's nuclear program again, either as some kind of distraction or some opportunistic move, or the problems in East Asia, particularly around Taiwan. Could, in an atmosphere of uncertainty and ferment, could something suddenly blow up? These are complete imponderables, but I think the prediction would be futile and preposterous and so on. But I think it's worth being aware of the experience of history that in times of great structural shock and uncertainty, other things which were pending, which would normally be kept under close and vigilant control, can somehow spin out of control. And there's something to be aware of. Probably end on that thought.
Thank you, Chris. I think from here we can conclude that there will be positive, negative consequences, and for sure, lots of instability to persist.
So stay with us, all of you out there. This is where, of course, I'm talking my book here, as they say in markets, but this is where clear and a structured analysis, I hope, can help, and we'll be continuing with that throughout the Global Data Group.
Yes, very right. Thank you for those instant insights. Thank you for listening, and from us at Strategic Intelligence. See you next time.